All right, everybody. Welcome back to the Cotton Mafia podcast. Me and Tyler are here with Gary Williams. He's an insurance salesman. Gary, you want to tell us how you got where you're at in the world today up in Lubbock?
Yeah, man. First off, I want to say thank you for having me on. It's a really cool place. I like it.
Thank you.
Yeah, man. Started out, Roscoe, Texas. Grew up, born and bred, baby. And went up to college at Tech. And, man, fell in love with Lubbock. Decided we were going to come back to Roscoe for a little bit, and just needed to get back to Lubbock. So I'd previously worked for Citibank back in college. Was a teller at freaking Kmart. If that, that tells you anything. So teller at Kmart, got accustomed with Citibank. Knew they had kind of an insurance division, and when we started trying to move back to Lubbock, trying to look for stuff. That was kind of one of my first calls and got in, and there's some really good guys that trained me, kind of guided me along the path of crop insurance, because coming into it, man, I had no knowledge, none whatsoever. Been in farming for, ever since I could remember. I've driven a tractor, during the summers, but had no knowledge of crop insurance. It's I just knew, hey, I want to be in agriculture, and this was one of my ways to do it, and still kind of live in Lubbock and be able to travel. So that's how I got in.
Yeah, and the reason you're on the podcast is because we're trying to get you to explain some of these terms, and the terms you were just saying you had no idea what they were,
Yeah.
And you'd been around agriculture. I've been around it too, and I don't know most of this stuff. And Tyler, do you know any?
Probably about as much as you do.
I know what an APH is. There we go.
For sure.
I know you need
history.
it.
Yeah, man. When you fill out that application, right, you see all these acronyms that like EI, TA, YA, YE, YC, SE. Like, you don't really know what any of that means. But if you don't have those elections on your policy, it could really affect how much you're going to get paid in liability, how much you've got covered. It can affect your APH, your yield. So yeah, we can go through and kind of talk about what some of these mean. Revenue protection versus yield protection, just kind of what do y'all want to talk about?
Yeah. So anyone listening, this can probably get boring really quickly, but this is going to be some really good information, I'm pretty sure.
Yeah,
so
for sure.
Stay with us, people.
Yeah, man. All right. So, there's a couple of things that most people kind of hot topics, enterprise units versus optional units. It's enterprise units, you to talk in layman's terms, you combine everything together. Each farm is farmed separately, but you get a discount with combining everything together, right? Optional units, you keep all your farms separate. You have a loss on one farm, you can get paid on that one farm. But the premium is significantly higher that way.
You can have a little bit of both, can't you? Or does it all have to be, if you had...
Per county.
Per county. Yes, per county.
Yeah,
per county, per entity, right?
Yeah, per county, per entity. So, like Nolan County, you could do enterprise units, and then if you've got stuff in Mitchell County or Scurry or Fisher or whatever, you can actually play with those.
If you had fewer farms, maybe more spread out, where you knew whether it would affect them. Another thing, Landon touched on it with Chase. Even though it's enterprise units, it's also by practice. So say you did you did solid row compared to 2-in-1, or a different row pattern. So is that that's a whole different policy in itself too.
Well, it would have to be under a different entity.
It'd have to be under a different entity.
Yeah.
Yeah.
Okay.
Gary had called me after he listened to that, and he was like, I don't think you're right, man. I was like, well, we had an idea.
Well, no, so the way that works, it's kind of like, did you take Marty Middleton's?
I was crop science. I didn't venture
yeah,
over
dude.
that
Landon
There's going to be like
knows about
50 people listening to this, and you'll be like, I don't like that guy.
Yeah, that's, yeah. And say what you want about him. He taught us a lot of stuff.
Yeah, he did.
But anyways, it's kind of like going into a big black box, and the answer comes out on the other side, and you really don't know what happened in that black box. So that's what skip row factor does, So on the back end, it's all non-irrigated or irrigated. So that's kind of how that works. But if you've got it in a separate entity,
it doesn't.
Yeah, you're separated out.
So if you're going to do a different row pattern, like you want to do 2-in-1 80s, and you want to keep those separate enterprise, you're going to need those in a different entity.
Correct. Yeah, and that goes, you've got to be conservation compliant. over at FSA. You got to have a 1026 on file. You got to do, you got to jump through the hoops to do that. But if you're trying to figure out 80 versus 40, it might be worth your while to do. But yeah, man, you can do it by county. Then there's multi-county enterprise units, so you can do enterprise with 2 counties. You just have to qualify for your enterprise on 1 county, and then you can combine that 1 farm. Because
is that even a bigger discount?
It's the same discount as enterprise.
Oh, okay.
So what you're doing, instead of paying the basic unit price on that 1 county, like if you had 1 farm in Scurry and enterprise in Nolan, you could combine that Scurry onto that Nolan County policy.
So it's for guys with 1 farm in another county.
Yeah, okay. Essentially. Because, they were paying, a basic unit price, which is about 3 times the price of what an enterprise is. So you can combine that on, and it's good. It saved people money. But there again, if that 1 farm in that 1 county has a loss and this other county picks it up, you're not going to get paid on it.
Right.
So anyways, enterprise, optional. We can talk about trend adjustment, which is TA. Trend adjustment is vital to have on your crop insurance policy, mainly because what it does is it takes the trend and the technology today. If you were to have that 10 years ago, your 200-pound crop would actually be worth 250 pounds, right? So if you had today's technology, today's seed, today's everything, they go back and adjust that APH 10 years ago. So they adjust those pounds up. That's what trend adjustment is. So it's just adjusting for that trend. Yield adjustment is very, very important here, dryland, West Texas, because those zeros, 2011, 2020, 2019 was a iffy year. You have those years. If you're below 60% of your T yield, what yield adjustment does is it adjusts it up to 60% of the T yield. So that zero, it really doesn't account for a zero. It's like 180 pounds, or whatever. So you're actually helping your baseline a little bit.
So that's for more of us who have more claims than like certain areas. Like if you had hurricane problems, or you like up in Iowa when they get the derechos and stuff when they get the zeros. Stuff, that's kind of what that's for.
Yeah, for sure. Then you've got yield exclusion. Man, that's a big one.
We all know what that one is.
That's a big one, man. Because I'll tell you, if we didn't have yield exclusion, like it would be miserable. You put enough zeros, enough 10s, enough 20s, enough 50s. I realize you're getting that yield adjusted with yield adjustment, but dude, you could get yourself in a bind real quick.
Still hurts.
Yeah,
still hurts.
Yeah, for sure. YC, this one's pretty new. It's called the Yield Cup. So basically, all that means is, on a bad year, you're not going to get anything. You're not going to lose more than 10% of your previous APH. So your previous approved yield, you're not going to lose more.
And
than 10%.
is this for just cotton, or is this everybody?
No, man, this is across the board.
Okay,
across the board. Wheat, grain sorghum. Down here, all we do down here, it's freaking wheat, cotton, grain sorghum, and then a few sunflowers. And you're one of those that does sunflowers. That's Yield Cup is a really, really good deal. It used to be kind of built in, but now they've added the YC option, so you don't have to have it if you don't want it. But losing more than 10% could hurt.
It's not like it. They don't have you can't gain more than 10%.
Yeah,
right?
No.
That sounds like something they do.
Yeah, exactly. No, there are some stipulations on price and things. You can't gain more than 100% of that price. So let's say, and I've heard this kind of thrown around. You could see $2 cotton, right? You could see $20 wheat. You could see $30 soybeans. You could see $15 corn. Well, that may very well be true, but on the insurance side, you can't have more than 200% of that. So if cotton comes in at, right now we're at $1.03 insurance price. So if cotton comes in at $2.50, the most that you can get is $2.06. That's on harvest price.
So I've always wondered with sunflowers, my contracted price is my insurance price, right?
Yeah, it either goes established price or contract price.
So if we're contracting cotton here in, say, 2 months, 3 months for $1.50, and so that would be my insurance price if I had a claim.
No, not on cotton.
Not on cotton. That's just on sunflowers.
Yeah.
Okay.
Yeah. So with cotton, man, it's your projected price is the average futures during the month of February of the December futures.
And that's for this area.
For this area, yep. And then for your harvest price, it's the December futures during the month of October. Okay. So they keep a average price and kind of go through every day. It's a pretty good deal, I guess. That's what revenue protection does for you.
Yeah, because it's not like prices have been moving to harvest prices have been higher in the last 6-7 years.
Yeah, man. I mean, the thing about revenue protection is it does take into account, the front end, right, the projected price, and then also the harvest price. So you can have situations where, let's just say you've got a 300-pound guarantee. At that $1.03, well, that 300 pounds, if you had 100%, if we're not dealing with shares or anything like that, what's that? 300 times $1.03, that's 309. Mm-hmm. Is that $309 or so? Yep. Something like that. Yeah. Anyways, that revenue is what you're covered, right? If you want to look at it a dollar amount that you're covering. If price goes down like to 80 cents, at harvest time, what they do, they adjust those pounds up. So your guarantee is not 300 pounds anymore. It's 350, or 375, whatever that ratio is. So what you do is you take the harvest price divided by, that original revenue guarantee, and that'll give you your pounds that you're guaranteed. You know what I mean? So it's a heck of a deal.
The last 6 years, though, that wouldn't have worked because we've had actual higher prices during ginning season than we have during growing season, which is pretty cool.
So the way that works is they just adjust your liability up. So you actually paid premium on the 72 cents, right? And it adjusted up to 83 or whatever that is. Well, that your liability went up, but your premium doesn't go up. So you get kind of the best of both worlds on that deal.
Okay. All right. That makes sense. So what was I going to say? You're looking at yield exclusion.
Yep.
How many years? It's 2 out of 10 years, right? That they'll take off.
No, man, they'll take off as long as it's less than 50% of the simple average for that county. They'll take it off, but you've got to keep it on there. I believe it's 2 years. I think that it's either the second year or the third year. If they come out and say it's an excludable yield, you can take it off.
Okay. All right. Okay.
Yeah.
And then seed endorsement.
Yeah, man.
That's a big one.
It's that one's fun. Yeah, I didn't really. I mean, I understood it. I understood. We're insuring the seed, right? We're insuring that, but I didn't really understand enough about it until a couple of years ago. So there's a seed endorsement conversion factor, and this is where it gets dicey. It changes every year. So you've got, like in the example that I've got right there, it's at 1.4, right? So you multiply the pounds that you're covered by 1.4. That's the conversion factor.
Where did that come from?
RMA.
Okay, so RMA comes out with that.
Yeah, they determined that. And I believe last year it was like 1.41. Some years it's 1.37. It just kind of varies.
So they just come up with a number that they think's good, and then
and they've got data that's driving that.
Okay.
Yeah.
So how would that? Now, sorry, I interrupted you on how that would work, but
no, you're good. You're good. So yeah, I've got to have my cheat sheet on this one. So yeah, on this deal, if you've got a 300-pound guarantee, you multiply that by 1.4, and that gives you your the amount of pounds of seed that you're insuring. And typically, it's either 8 cents or 9.5 cents or 10 cents, and they come out with that about the same time that they do the Lent. So you're able to know, hey, I'm insuring cotton seed at 10 cents, and so that conversion factor comes in. And let's say you your indemnity for cottonseed will be calculated as followed. Your 300 pounds times the 100 acres, that gives you 30,000 pounds, right? Mm-hmm. Let's say you made 150 pounds. So that's half. Well, it would be, that'd be 15,000 pounds times the 1.4, and that gives you your actual, what you made on cottonseed. And then they adjust accordingly. So, you've got 300 pounds times, it's confusing.
It gets confusing, yeah.
It gets real confusing.
What I was going to say is, so that could actually be a big deal when cottonseed becomes edible for humans and we start selling cottonseed to make money.
Dude, yeah, that's a whole nother ball game.
I was about to say, I think that'll be a whole different realm of...
Yeah, but you're going to need the seed endorsement because you're selling the seed for a whole lot more money.
It's going to be its own seed endorsement.
Yeah, I mean, you could... I wonder, in that scenario, I wonder if you'd be insuring cottonseed separately from, Lent.
Two policies.
Well, probably how you certify it. Let's say if you certified it as edible cottonseed at FSA, say once it's down the road, that changes your policy. But if you're just still planting fiber, then you're probably going to have
because
just as normal.
Just kind of spitballing here, that would be two separate tops, right? Because you've got oil on sunflowers. You've got sunflower oil and then confectionery, or how does sunflowers work on the edible sunflowers? What are they? Do you know, is that confectionery or what is that?
The confectionery?
Yeah.
There's a big price difference.
There is?
Huge
price difference.
So, and then it gets down to what size of confections you're growing because they like the large seeds.
Yeah.
And then I mostly grow mediums because I never catch rain.
Yeah.
But and they're very hard to get confectionery contracts. People that have them locked down. So that's why I'm stuck with oil. So I've got one confectionery, and they were like, don't bring us any more of this trash unless you put under a pivot because they were like, these are mediums, and we don't want these.
Really?
Yeah. And then I threw some barbecue in there, and they got pissed, and they wanted ranch. It was a whole debacle. Yeah. It was mad.
Them dill pickle ones. Man.
Yeah, those are the best. Don't mix them with the planter. They get pissed.
They don't like that?
No.
Shoot.
Okay, so that could be something where there's going to be two different policies. That's something to look. I mean, Tyler, you've kind of read up on that. When's that coming out?
I hadn't really read anything on it in a while because there was a little bit of talk on it. I mean, then the breeder at A&M kind of had come out with it and was working on it, and then it's kind of gone quiet. So, I mean, it's still in the process, but it's going to take years of, I mean, it's not even really into, full-blown, up in the, I wouldn't say corporate, but it's not in the main lines of cottonseed we're doing. And if it's going to be a main line, it may be its own company, but, it's not even on a commercial scale yet. So, if you're not even talking commercial, if it's still in nurseries being tested, we may not see it for
10, 15 years.
I'd say 8 to 10, but it's not really aimed for us, needless to say. We could probably grow it, but their aim is to send it over India,
100%.
Pakistan, where they need this source of oil food, not even for humans, but for pigs and animals. It's got a whole realm of where it can fit, but I don't think the U.S. is going to be the major producer, which may help us in turn because where they're producing fiber in India, Pakistan, major cotton growing countries, well, if they're switching to more of a consumer type cotton, well, then in turn that opens up our market for fiber because, there's only going to be a handful of places growing it now.
Yeah. So, I wonder if we'll see everybody likes quinoa, now is cottonseed going to be the new quinoa?
The new fad thing. They're going to be liberals over there in San Francisco wanting organic cottonseed or just cottonseed in general, and they're going to be like, if you saw, no, kidding. But, Gary, can you kind of tell us, since we kind of are trying to get this towards new farmers also, so we're kind of trying to do a little 50-50 mix here. If you had a brand new farmer come to you saying, hey, I need a policy, how would that kind of work out versus what you're dealing with your same customer every year?
Yeah, dude, the initial setup is very, very important because you do have to understand what trend adjustment, what yield adjustment is, because I don't want to sell somebody. I don't want to sell you, Tyler, or you, Landon, something that you don't really understand, and that's hard to do, right? This still,
And finding the information.
So many facets to crop insurance that if you don't really have a good agent, or you don't really trust who you're doing business with, it could really hurt you in the long run. But yeah, when somebody new comes in, man, you just kind of you've got to get a feel as to what their operation is, which is hard to do because farmers don't really want to give you any information.
Right.
They how many, the question, how many acres do you farm? That's a big no-no, right?
Yeah.
Nobody wants to, you don't really talk about that.
It's easy. Not enough during, too many during plant season, not enough during harvest.
Exactly.
How many pounds did you make?
Yeah. I mean,
is it what the APH said or what it actually made? No.
Yeah, you start asking those questions and they kind of get defensive, or, maybe they're new to it and they just, spout out. But you've got to get an idea as to what their operation is. Are they eligible for enterprise units? If they are, is that something that they're interested in? I mean, most time you're looking at the savings, right? You're looking at premium dollar for what you get out of it. And when you're looking at a subsidized rate of enterprise units, it makes it a lot easier to take that to your banker and say, hey, I'm insuring, 10,000 acres or 5,000 acres or 1,000 acres or even 150 acres. This is my rate. This is what I'm getting paid out.
Right.
Now guys getting started out that have the one farm, and that's tough.
Yeah.
Because you can't qualify for enterprise. So you're having to pay a basic rate, which, you're probably talking about, $30 for $150 worth of coverage type of deal. Whereas enterprise, it might be $10 for $150 worth of coverage. So you just got to get a feel as to where they're at, kind of what they want to spend, what they need to cover. Because
that's kind of the big one for some young guys. They have to go through certain agencies and they need the most cash flow option
for sure.
And insurance has to be on that sheet, and that's kind of their banking number is what are you going to collect on insurance?
Right. Where is your net position on insurance?
Yeah.
Yeah. And that's tough, for somebody that was at 500 acres, now they're at 2,000, almost overnight. Like that's hard to transition. Now if you go 500 to 1,000 to 1,500, kind of slowly but surely it's easier. But yeah, when you jump from, having a liability of $200,000 to $1 million, oh man,
that's exactly what I did.
That banker may look at you funny,
Right.
And I mean, all I can do is, hey man, this is the best, bang for your buck. This is where you need to be. You've got to make the decision. You're the one that signs the paper, right? You've got to make that decision, and hopefully that was made March 15th.
Yeah. I'll touch on something. I run into the same. You were talking about information. So I do helicopter hog hunting, and I'm also a farmer and have some cows. And I have to go talk to ranchers about signing their ground up, and they will not let me have their landowners' numbers. And I'm like, the state of Texas makes me have this number. And like, so your dad being a farmer, have you kind of ran into the same issue with like, hey, I need your landlord's phone number to talk to him and get him signed up? And they're like, no.
Yeah, dude, it's hard. Freedom of Information Act, and they'll hammer you with it.
Okay.
We can hint on it. We can kind of discuss it without going into full detail. So maybe some people will call you and ask questions. But we had discussed it. Well, certain programs, and you were saying at one point there's some stuff out there that a lot of people don't know about, talk about, and there's money left on the table that essentially doesn't go anywhere. But I mean, is there a way you can briefly touch on that without, fully going into the whole details of stuff?
Yeah, you talking about like annual forage,
or some people call it rain insurance. I mean, there's
pray for rain.
Yeah, I just feel like there's programs out there that don't get talked about on average, and there's, like you said, money left on the table that could do a lot of help.
For sure. Annual forage, I know, it's been around for a little bit. It's changed probably 3 times since its inception. I believe it was 2007 was when it came about. I know PRF was 2007. But what annual forage is you're able to insure anything that's annually planted on that crop year that is certified for forage or haying or grazing.
Right.
So its intent is for guys that go out there and, they hay, they graze, they do stuff for livestock, right? So your wheat, your triticale, your oats, anything like that can be covered under this annual forage, where like triticale is not an insurable MPCI product. So down here, you can't insure triticale for grain. So one way to do that is to put it under an annual forage policy.
Because odds are you're either going to graze it or you're going to bale it.
Yep.
So.
Yep. And that's the intent of it. It really depends on the county. The county base value is what you go off of for what you're able to insure. But kind of rule of thumb, you're looking at a 10% rate. Like if you're insuring, if you're getting it for $250 an acre, liability, it's typically about $25 to $30, worth of coverage or premium. And man, it's a great tool. It's gotten a lot of people that were unsick. It's worked out really well.
But it doesn't work on the same realm as, like, say, cotton. You were saying it works in seasons. Like there's 3 different seasons for it?
4 seasons. Yeah, 4 seasons. So it's a sales closing on July 15th. You've got season 1 that works July 16th to October 15th is the plant date. Then you've got season 2 that works October 16th to January 15th. And then, so that's season 2 plant date. Season 3 is January 16th to April 15th. And then season 4 is April 16th until July 15th. And then it starts all over again. And with annual forage, you can go season 1, like let's say you sowed something September 10th, right?
Right.
So that's season 1. You can actually go over on those same acres and insure a crop in season 3. So you can do essentially double, but you have to skip a season. Right. So you skip season 2, or if you go 2, as your first one, you can go 4.
You can plant in 4, which for our area, season 2, you'd essentially be planting right after, say, a cotton harvest.
Yeah, that's
plant your wheat,
what works
hoping
best.
Let's just say you're hoping for baling, but like a year like this, you can hit season 4, not re-up it, go right into cotton and still have full coverage like it.
And you got a free cover crop.
Yep.
Free cover crop. You get, I'm not saying a huge payment, but you made some money on a time of year that most people are not doing anything and or spending money.
Yeah, for sure.
So,
for sure. It and the thing about it, man, guys that are doing cover crops like this just isn't going to work because you have to have it certified for cover over there at FSA.
Right.
But if you're doing forage, if you're doing stuff like that, that's when this kind of works.
Gary. Oh, we lost video. Don't worry about it.
It's all right.
Perfect.
Yeah.
Nobody wants to see this ball dead.
Yeah. Well, YouTube's going to be short, or I probably won't even upload it. Anyways, hail insurance. You are hail insurance selling man.
I try.
Man, you can make it hail on my crops. Gary's like, hey, you want to put some more on? Boom, hailstorm.
What do you call it? The white combine?
Yeah.
Man, I'll tell you,
I've lost more money to a white combine than any custom harvester trying to steal stuff from out from under me in my life.
Dude, the worst thing that can freaking happen with hail insurance is September 30th hail. And what did we get this year? Freaking September 30th hail. Like that, freaking, because you babysit your crop all the way through, and then you've got 600 pounds out there. Next thing you know, a hailstorm comes through, and now you've got 250. And I don't care how much money you put on that crop, as far as hail insurance goes, you're not going to recoup what you could have had for dollar cotton.
No.
Right.
Oh man, makes you sick to your stomach. But yeah, hail insurance, man, it's a you've got to have it in this area because you never know. Little pop-up storms, something comes through, that dry line is just west of Colorado City, and it builds up, and here we go. Oh, man.
I think I've had a hail insurance claim 4 years in a row, yeah. I'm pretty sure. Now, that's pretty good, though, for other places, too. So if we're based in West Texas, but, it hails everywhere randomly, and some of the places it's really cheap to put hail insurance on your crops.
Yeah, for sure. The biggest deal, like with cotton, it not necessarily for wheat, and I don't know. I'd have to go back and look and see if corn guys, if they have it. but the half rate, July 1st rate, that's big. That's huge. And it typically goes into effect. Ours, we sell for like 5 different companies, so we can kind of pick and choose. But it typically goes into effect the Monday. It's either the Friday before or the Monday after Father's Day is when that goes into effect. So it really works out good here in this area with a June 20th final plant date.
Right.
You can kind of hold on, maybe put $50, $100 on stuff that's already up at that full rate, and then go in after the fact and really bump up your coverage on that half rate.
That's what you talked me into this year or last year, and it worked quite well.
Yeah. And dude, you can, there's different ways to do it. You can put like something I like to do is combine coverages. So you've got, your 10% deductible. You've got a 20% deductible. There's 2 types of 20% deductibles. But what I like to do is do the 0 deductible for, $50, $100 or something. That way you're covered. If it's 5% loss, man, you're getting your money back. Right.
At least getting some replant seed back.
You're getting something back. And then really load up on that 20% rate, because it's a lot cheaper than that basic coverage that doesn't have any sorry, I
just hit you with. I'm sorry, I was putting you on Snapchat.
You're good.
I didn't know my light was on.
You're good. But yeah, dude, no, that basic coverage is good because there's no deductible, right? But it's a little more expensive. So you really load up on that back end with the 10% or 20% deductible.
Not bad. So I'm asking everybody the same question. I kind of asked you a couple weeks ago, and I'm liking to hear everybody's take on this because everybody's having a different answer. So I'll ask you, what is your biggest issue in the cotton world, or maybe just the ag world you're seeing right now?
Yeah,
is kind of being a problem for everybody, or what you're kind of seeing?
Yeah, man. Listening to the podcast with Chase, dude, he had a great, I hadn't
that was a very politically correct answer.
Very, very politically correct. Education. I never even really thought about that. That's a heck of an answer. And then with Larry Black, talking about labor. I've heard labor before. Something. I mean, you could go on and say something that we talked about in college, right? Like, how do we feed America with, growing population and decreasing acres, right? So that's something you could talk about. You could talk about diesel prices. You could talk about seed prices, margin not being, it's razor thin and it doesn't really move because of input costs. But dude, my biggest deal is something I heard a long time ago. You remember the old saying, if it ain't broke, don't fix it? I mean, like everybody says that, right? If it ain't broke, don't fix it. Ain't broke, don't fix it. My deal is, if it ain't broke, you're not looking hard enough, right? Like, you can always do something a little more efficient. So don't get stagnant. Like, I feel like in agriculture, we're trying to get out of that. If it ain't broke, don't fix it. Right, with equip programs, with annual forage type stuff, with trying to think of things a little bit differently. And I feel like if we don't start thinking of things differently, we're going to get burned.
Yeah, because a lot of people are sitting here thinking, we're just talking about dryland cotton farming, but I mean, I've got farmers that grow 3-bale cotton every year that I work for, and they have the same issues with margins.
Yeah.
And they're doing the same things we're doing to try to make more money because their inputs are just as high as our irrigated stuff, if not more.
Yeah.
Because they've got bug problems, and it's everywhere you look, we need to be doing more stuff to be making our margins less slim.
Yeah. Yeah. I mean, it's legitimately razor thin right now. And if there's any way that we can open that margin up, I mean, we've got to do it.
Yeah, and it's the same for insurance agencies too. I mean, I remember you told me one time they cut some of y'all's pay too, didn't they?
Yeah, I mean, everybody's dealing with it, right? Oh yeah, we're getting $3 cotton. Like, this is awesome. Oh yeah, well, we got $60 Roundup, or we've got 700 pound, nitrogen or fertilizer. I mean, it's difficult. It doesn't matter what part of agriculture you're in right now, it's just difficult.
So basically your answer is we need to find ways to increase our margins.
Yeah.
So it's not as tight. So farming more acres is not the answer.
No.
And even for you, picking up more acres to insure, that's I mean, hell insurance, that might be a slightly different story. I know there's profit in that a little bit, but
yeah, I mean, I was talking to a guy the other day that said what's crazy is he is making more money right now on 1,500 acres than he was at 8,000.
Yeah. Well,
you know what I mean?
Like,
and if you look at that dollar per acre or however you want to look at it, like he just became more efficient with what he had, right? He got rid of some stuff, got rid of, the fluff, I guess, and he has become way more efficient on that 1,500 and is actually making money now.
Yeah. One thing that, me and you went to college together, and one thing I never heard was how lumpy farming is. If you want to gain 2,000 acres and you're a 5,000 acre farmer, you've got to go buy a new tractor. You need to go buy a new planter. You need to go buy this, this, and this. You can't just increase those acres and then pretend that you can farm it efficiently as you were those 5,000.
Yeah.
And then it takes another 5 years to pay all that equipment off.
Yeah.
And by that time, you've already gained 3,000. And then at what point?
Where does it stop?
You're instilled when you're farming from a child. If you're hanging out with your dad or whatever, and somebody offers you land, you take it. You don't ask questions. You take it, and it's just you figure it out.
Yeah.
Because if you're never will be offered that land again.
Yeah.
And
yeah. No, we didn't really talk about that. And then you think about the labor too. Like, not only do you have to buy another tractor and another plow, and you've got to have somebody on that tractor, and finding good help right now is kind of difficult.
Yeah. I mean, I know that for a fact. Like, good help. Like,
Yeah.
oh, you want to just throw some rando on a CS 770 and see what happens?
Yeah.
Like, yeah.
Yeah,
I don't
with,
think so.
with $800,000 out there, like that.
I
just
wish that's
doesn't
what
make,
it cost.
Yeah, I know.
I really wish that it was 800,000.
I don't even want to see what that cost.
Yeah.
Oh shoot!
I looked at the price and then I looked at my wife and I was like,
Gotta
"What
have
are we
it, right?
doing? What are we doing?"
Gotta have it.
I mean, you got to have it because I've got a job, and then I get jobs because I have the best equipment and the newest equipment. So we make more money for the farmer because we've got better turnouts and stuff like that.
Yeah.
But I sit there and I'm like, when did I need $3 million worth of harvest equipment to do this job? Like, at what point did it just become too ridiculous?
Yeah. Yeah, dude. I'll tell you though, going up to Lubbock and riding with you over there in Idlewood, like, you do a dang good job. So keep doing what you're doing because it's working.
I think it is, or I make sure everybody thinks it's working. It's like we've had great comments on the podcast. It's like everyone's like, "This is looking great." And I'm like, "Man, this is like I got crappy cameras, y'all. If I had good cameras, y'all could see how bad the studio looks right now." So
no, I like the red and black, dude.
I don't know where I came up with those colors.
Yeah, heck yeah, baby. That's,
yeah, we built the chairs in here. The chair you're sitting on, I built that.
Hey, man.
Apparently, I know how to do upholstery too.
It's comfy.
We had Tyler's little girl in here. She was running the staple gun, just popping staples on the back of this stuff. And
yes, dude.
If I showed you what was behind it, you'd be like, she wasted about 300 extra staples.
Hey, man. You got to teach them young.
Yeah. So, yeah, I don't think I asked you to bring anything. We've had some people putting stuff up there up top. I mean,
I'll get you something.
Yeah.
Dude, I like that.
It's a dollar bill.
8RX. That's
yeah, I ordered that 8RX. It's a 1/16. I ordered it like June of 2020.
Did it just
from the
come
John
in?
Deere house? It came in. When did I get it? Like 4 or 5 months ago. 4 or 5 months ago, I gave it to Tyler's little boy because I don't have children. So I gave it to him, and he's like, looked at it, and I was like, this is not an actual toy.
Yeah,
so he just kind of stared. He thinks it's the coolest thing ever, but no, if I told you how much I paid for that, you'd probably.
Yeah, thanks a lot, Corona.
Yeah. Well, even the 8R series tractors are expensive.
Really?
Yeah. And then I got offered a 410 RX the other day. Brand new one coming in. Over $500,000. And I know a guy who's going to buy it. And I sat there and I said, what? How are you going to pencil this out? Like, I I don't understand when you can go buy 4 tractors that are used with 2,000 hours. But no, I got to have a 8RX 410. You're like, how's that going to pay for itself?
Dude, I mean, it's cool.
Yeah.
I like it. It's going to look really good in the freaking field.
I guess that's what it means these days. You got to look good.
Look good, feel good, play good.
Yeah. Do you have any customers that do stuff like that? Like, I want a 90% coverage rate with stacks on. Well, you couldn't do stacks on top of it because then you would be over 20%.
Yeah, I mean, stacks, you can go up to 90%.
And then it'll be a 110 coverage rate? Kind of? Is that how that works?
Nah, it goes down to your underlying multi-peril. So, like, it goes from 90 down to 70% or 75. It works that way.
Gary was originally supposed to come on the podcast for stacks, but we jacked around. We didn't get our equipment in time. And it is past March 15th, guys. So hopefully next year, if we're running into the same issues, we can try to figure out. We can bring Gary on here.
Yeah, for sure.
Middle February, so we can make a decision, and then everybody can go to FSA on the 15th and make them really unhappy. Because,
dude, I'll tell you, that was a tough decision to make. And I'll tell you, at this point, whatever decision you made is the right one. Whether you went ARC or whether you went stacks or PLC.
It's got to be the right question because you can't change it.
You can't change it at this point, so you did the right thing.
Yeah. I have a new county that I'm dealing with right now, and they had given me the farm numbers, and I own the farm. So, and I had completely forgot about it. So I called them on the 15th. I'm like, hey, am I signed up for stacks? And they're like, you're not signed up for anything. I was like, well, that's good, right? I mean, I can still pull a stacks policy. And they're like, you could tell they were getting aggravated on the phone. Yeah. I was like, send me an email real quick so I can get this filled out. But yeah, apparently it doesn't just roll over.
Now you gotta unenroll those acres. And I'll tell you, there ain't no 2 FSA offices the same, but March 15th was, dude, hard deadline. Yeah. Hard deadline.
Well, it's like I deal with an FSA office, and they're okay. I mean, they tell you what needs to be done most of the time. I deal with another one, and when I get paperwork, she's like, has smiley faces on the paperwork with the stickers, like, have a great day. And I'm like, I'm going to transfer all my land over here.
Yeah,
but,
dude.
so it's definitely, and that's not just in this area. I've talked to farmers, all over the place. Not one FSA office is the same.
No, and I'll tell you, they're all, if you ask for help, or most all of them that I've dealt with are very, very helpful. I'll tell you, they're short-staffed. They're doing everything that they can, and I feel for them. I really do. But
I would not take that job.
Man, it's tough. It is really, really tough. But yeah, they're very helpful, and they've helped me. I'll tell you.
Yeah, well, I like it because I'm like, we're personal with most of them, and they'll sit there and be like, they'll call me. I'm like, hey, Landon, you need to come in here and do this. And I was like, I had no idea. And they're like, well, we send out this mass email. And I'm like, man, that mass email goes right where it goes. Every other email I get goes. It goes in the spam folders. Like, so I don't want to looking at that. So
shoot. Yeah, USDA, man. That's a whole nother ball game.
Yeah, I think we have somebody from FSA going to come on. Well, they're not going to be from FSA. They might work at FSA, and we're gonna call them a certain name. Probably won't even tell you because somebody will get mad.
Yeah,
but he knows a whole lot of information.
Man, there's a lot of them that do, and FSA is really good for young farmers too. Trying to get started, getting an FSA loan. They do a really good job over there.
No comment. All right, Gary. Well, we're going to wrap it up. We're hitting up on 40, 50 minutes, something like that. Went long again, but I think we're just going to start them at 40, 50 minutes.
Might as well.
We started out, we're going to do all these at 30, and it never works out.
Yeah, no. But, yeah, man, thanks for having me on. I really appreciate this. You got a really nice studio, and I like it. Yep. Like being a part of the Cotton Mafia.
Yeah, appreciate it, man. Thanks.
All right, dude. See ya.